A very warm welcome to all of you. Thank you for joining us for today's session on data visualization. And I have the pleasure to introduce that joining us from USA is Amy Ford, Glime's own Wonder Woman. And if you have the chance to talk to Amy, you'll realize she's very passionate about accounting and finance and has been sharing her knowledge of the accounting world to candidates such as ourselves, professionals, and even management for over almost 2 decades. So, Amy is going to help us introduce us to the world of data visualization. And specifically, to do this, Amy has picked up a few topics from the CMA level 1 and 2 to introduce us of how these visualizations can be applied. So, with these topics, Amy has prepared a few things, and I'll let Amy take it from here and talk more about what is the plan for today and how a CMA aspirant can use this not only in the exam but mainly for daily life and in their career as well. Over to you, Amy.
Thank you, and it's great to be here today. So we'll start off with a few general points about the CMA exam, and then we'll really dive into two topics from each part. I picked these two topics as representative topics that would allow us to talk about visualizations, but also the CMA exam as well. All right, so let's get started. So let's first just talk about the CMA, Certified Management Accountant. This is a global designation. It's being taken this exam is being taken by accounting and finance professionals all over the world. It's this globally recognized credential that really is the, the stamp of approval on your skills and knowledge in accounting and finance. And so it's a flexible exam. It's offered in hundreds of locations, and there's more than 125,000 global members in the network for the CMAs and the IMA. So this is the basic steps for sitting for and earning the CMA credential. Just a couple key things I want to point out. It's a two-part exam, and it's offered in windows by the IMA. So you have a window right now. We're in the May-June testing window, and then the next testing window would be in September, October. Each part is going to be 100 multiple choice questions and two 30-minute essays. All right, so what would you do if you're a CMA? Again, I think of it as that stamp of approval. Some of the job titles that CMAs have, the one that a lot of people think of is cost accountant, because they think, well, CMA, managerial accounting. It's not just a cost accountant. This is a role, a credential for the CFO, the treasurer. You could be an analyst, a financial analyst, a business analyst, a data analyst. These are all potential roles or positions when you have a CMA. All right, so we're going to talk about both parts of the CMA. And the first part we're going to talk about is part one, which is titled Financial Planning, Performance, and Analytics. And I want to point out that data visualizations are specifically testable in part one. Now, what does that mean? It doesn't mean that as a candidate, you're going to be preparing visualizations, but you could be tested. For example, here is data that the company is trying to present. Which type of visualization would be most useful? And your choices could be pie chart, line graph, bar chart, and you would have to identify the best type of visualization. Part one also tests data analytics. For example, do you know the difference between predictive and prescriptive types of analytics? So all of that is included in this analytics section of part one. All right, so let's get started. My first example is a budgeting example, because I think that budgeting is often a role that the accountant has when they're working inside the business. So here's data that we might see presented in doing budgeting work. So a typical scenario here is that the company is trying to budget for the future. They're analyzing sales trends, okay? Because the sales price per unit was adjusted. And they're looking at sales volume and sales price, okay? And as we look at sales data, we also see the cash position for the company varying dramatically. So what does that mean in terms of how could we visualize this data? So I wanted to start off with, I think, a very basic visualization here, but I want to point out a couple things. So here is our sales data. Notice how over here, can you see my pointer can you see my mouse? I'm trying to determine that. Ashkay, can you see my mouse?
Yes, we can.
Okay.
We can.
I'm a definitely like a pointed out on the screen type of person. So I wanted to make sure that that was visual. So notice how we have units. The first thing that's very important in visualization is that we have labels so that we understand. At first glance, could this have been dollar amounts? Absolutely, this could have been dollar amounts. And, I want to make sure that I'm looking at this sales budget. The sales budget is actually a combination of the sales price per unit and the sales volume. So I want to make it very clear that this is a visualization for units. So instead of Excel, and I know everyone loves Excel, right? Accounting and finance folks, we love Excel. But do we see the pattern or the relationship better when we have it presented in this visual form? Instead of, an Excel August, September, October, November, December, and all the numbers, we can clearly see the pattern in that October is the largest volume of data for our sales volume. The other thing I want to point out is I will often see visualizations like this, but they don't have the numbers. These are called the data labels. So while this would have been a very great visualization, and we would have obviously seen that October was 230,000 units, if I didn't have the label here, would you have been able to tell me the exact sales volume in units? I mean, I would look over here and I'd go across and I'd be like, it's about halfway-ish, okay? So if you want to make sure that we keep that precision and that detail, using these data labels, I believe, is very important. So this is an example of a bar chart. And again, today I want to point out several key things to look for in preparing your own visualizations. This will help you in your daily work as an accounting and finance professional. But also I want to talk about how if provided this information, if on an exam question, you were provided a sales budget in the volume here of each month, could you, using this data, could you go ahead and prepare the elements of the master budget? So what are the types of budgets that a CMA candidate should be able to prepare on their exam day? A sales budget, a production budget, a direct material budget. Some people call that the raw material budget. Direct labor budget, manufacturing overhead budget, cost of goods sold budget, selling and expense budget. Wow, that's a lot of budgets. Those are all different types of budgets that are a component of the master budget process. So CMA candidates, budgeting is one of the major areas of part one. Now, with that being said, I think it's important to understand that the CMA exam is not only going to ask you calculations. You need to understand the process. So other types of questions that we see for CMA exam is, which of the following is a benefit of budgeting? Why does a company want to use a budget? We all know that it helps with planning, communicating, coordinating, motivating. All of these are reasons for a company to use a budget. So the CMA exam includes a combination of concepts and calculations. So moving on with a budgeting example, I wanted to show you what now is called a dual axis. Dual axis meaning we have two axes. Okay?
Amy, apologies. Sorry to interrupt.
Yes.
On the previous slide, I believe Muhammad has a question.
Oh,
Muhammad,
okay.
please do share a question.
Do you see the question?
Muhammad has raised his hand.
Oh, okay.
Mohammed, can you? I think you're on mute. If you can unmute yourself and please share your question as well. Okay, maybe some technical issue. Amy, I
Okay.
believe we can move forward and Mohammed will come
Okay.
back to us.
All right. So on this next slide, I want to show you what's called a dual axis, meaning there's two axes. So it's the same bar chart that we had previously, but now on the right-hand side, we've added the sales price per unit. And notice down here, we have our legend or our key, depending on the term that you want to use here. So we've clearly identified down here that the blue, this light blue, these are the sales units. And this red line is now our sales price. And that is our second axis that we've added. Now, I want to know, do you think this is better than the first one? Do you guys agree that this is better than the first one? I don't know if I can see the reactions, but hopefully everyone's agreeing that this is an improvement.
Of course it is. Of course it is. I mean, not only by looks, but even by the information being given, definitely much better.
Yes. So because the key here, why is this important for this entity? If this red line was always $45, that wouldn't be important. If we kept the same sales price per unit every month, we would just have it as a given piece of data. The sales price is $45 per month or per unit, and it was the same price all months of our analysis. What's important here is that we're not adding to the visualization just to make it more elaborate. We're adding relevant information. Okay, so if the sales price is different each month, this becomes relevant to our analysis. And so we have a bar chart we could use, but adding the sales price per unit is very much relevant to understanding the situation at this company. And so you know, in the sales price, we all know our economics. That's a great question. Is economics tested on the CMA exam? We do see a little bit of economics in the concepts of supply and demand, specifically the price elasticity of demand. We see that on part 2 of the exam. So I know if you're like me, I actually have a minor in economics. That's my secondary area of study in accounting after accounting and finance. And so I really enjoy that kind of element. And I know some of you may also have that economics background. But here, you know, we see the sales price drop. Our economics says, well, when the sales price drops, more people should want to buy our product. So that is called a dual axis visualization. So I wanted to give everyone a chance to look at that. So I'm not sure, will I see the, do we have any questions since we were having some technical difficulties?
Amy, I believe we can move forward.
Okay.
And towards the
Okay.
end of this section, we can open an open forum and ask everyone a question.
Okay. Thank you. Another type of budget that I think is really important to visualize is the cash budget. So one of the more difficult budgets that's tested on the CMA exam are the cash budget. So when I talk about the cash budget, a CMA exam candidate would have to be able to calculate the projected cash inflows. So how are we receiving cash over time? And then as well as the projected cash outflows. So based on different patterns. So what a CMA exam candidate would have, for example, is we expect to collect 50% of our sales in the month of the sale, and then 20% the month following, and then, you know, given a pattern of when do we collect our sales. We would also have a pattern for our cash disbursements. So when do we purchase the inventory? Now, this is where you have to think backwards. If we're making a sale in March, we purchase that inventory. If we're a retailer, we're purchasing that inventory in January and February for the goods to be on the shelves to sell in March. When do we pay our inventory purchases? So you can see where cash budgeting is very important. So we might be purchasing items in January, paying for them in February, selling them in March, and then collecting them in April. And so understanding the cash flows of the business are very important. So this is a great example of a visualization. I'm using that dual axis that we talked about before, where I have our cash flows, but then I have our ending cash balance. So the red line here is our cash balance. And I picked a pretty dramatic one to show you, we have a positive cash position, and then we have negative cash positions. What a CMA exam question could ask is, after calculating the budgets, what are the financing needs? So many times entities will have lines of credit, and they'll have to be determining, in using our budgets, what amount on the line of credit would we need to be using. All right, so the last piece of, I was talking about that collection pattern. This is a great example of when we would want to use a pie chart. A pie chart gives us pieces of pie. So depending on if your pie is pizza or pumpkin pie or apple pie, it's a circle, and each component is a slice of the pie chart. This is useful when we're looking at something that has a whole. So anytime you want to look at a component of something and see the different pieces. So for example, we hope we collect 100% of our receivable. So if 75% are collected in the month of sale, 20% the month following, and 5% the second month following, that would be an example of a pie chart. You could use this for product distribution. What percentage of our sales is product A versus product V? Go on through there as well. So a pie chart is useful for showing percentages or components of the whole. So this might be something that you would be given to be able to do that cash budget, those projected cash receipts. All right, that finished up my budgeting example. I'm not going to show you any exact calculations for budgeting. I wanted to show you a lot of different visualizations, but I wanted to talk about the different types of budgeting calculations you may have. Do we have any questions about budgeting?
Amy, I have one question, which
Okay.
is this particular chart which we have. This is depicting the collection. Let's say, for example, I did $100 of sales in January. This is telling me when do I actually receive that money.
Correct.
Is my understanding correct?
That is
How
correct.
much of that contribution is coming in which month?
And so a CMA exam question could say, given this collection pattern, given that sales budget that we saw earlier, how much would the company expect to collect in April? And so you would have to put together, that means in April, you would be collecting 75% of April, but you would also be collecting some from March and February. So you have to work backwards. Okay.
So this is in this particular month, 75%. If I'm drawing this pie chart for April, then in April I collected $100. 75 was from April sales, 20 was from the March sales, and 5 was from maybe the Feb sales.
Yeah.
Interesting.
Yes, very good.
Thank you, Amy.
Very good. Now, our next topic, I wanted to really dive into some calculations and show you examples of the calculations that you may see on a CMA exam, as well as couple it up with some visualizations. So let's go into overhead and costing, because I think that when people think of the CMA exam, Certified Management Accountant, they think of the costing topics. So costing topics like job costing, process costing, overhead, predetermined overhead rates, these are tested in part 1 of the CMA exam. So Here is an example of information that you would be provided. Company Q is using machine hours to apply overhead. We're provided budgeted and actual overhead cost. And in these visualizations, that's how we're going to be provided the data in the visualizations. And I'm going to show you those visualizations. But what types of questions could you see on your exam related to overhead and costing? The CMA exam, you would need to be able to calculate your predetermined overhead rate, how much overhead is applied in year 4, and what is the under or over applied overhead for year 4. Now, you may be thinking, well, how would I see this on an exam? Any content on the CMA exam could be tested in a multiple choice question or one of those 2 essay scenarios. In advance, we do not know what topics will be tested in multiple choice versus essays. So my advice to candidates is that you study the content. You study this idea, this concept of overhead and costing. And by doing that studying and that preparation, you're going to be ready for whatever question you see on your exam day. For example, if your multiple choice question was this 3rd question, what's the under or over applied overhead? You would have had to do the work from 1 and 2 to be able to answer that. So sometimes you have to do multiple steps based on the question that's being asked. On the other hand, this could be part of an essay scenario, and that essay scenario would ask you maybe each of these components. All right, but how would this be visualized? I grabbed this 12 months of data, okay, our overhead cost for year 4. We had budget and we had actual. Now, at first glance, if all you were given is this kind of, doesn't that look like something out of Excel over here, you know, all the 12 months and all the data, it's really difficult to understand patterns. But when we put it into a visualization, I love this visualization with how it overlaps the data. You know, some months the budget was more than the actual, other months, like here in April, it's very clear to see, oh, in April, we actually had a lot more overhead than we had budgeted. We might want to start to look into that. So this is a great example of the visualization to help tell your story. Would a user understand the relationship between actual and budget better with this visualization? Absolutely, because I just see a bunch of numbers in the 20,000s when I look at this in this form. Now, we're going to need to know these total numbers. So it's important to understand that relationships and data over time are very useful, but we'll be using these total numbers when we're looking at the calculations for this year. All right, now I have a couple more visualizations to share with you. What other information do we need to know? We need to know about our production, our units. Okay, so again, we had a budget. Look at this budget here. The budget is a straight line across. The budget was 12,000 every month. So we see that, but then we see how our actual results, I made a lot of very pointed, dramatic, you know, I think of it, it looks like a mountainscape, I think a little bit. I made it so dramatic. But you can see how we can, you know, visualize how production varied. And I look at this and say, wow, we produced a lot less in July. And I have to look into that, maybe why, you know, and then we see it ramped back up. And in September, we almost made up for that. So looking at our production over the year. And then down here at the bottom, I really like this one as well, because instead of doing the green where this was the 12,000, for the machine hours, I wanted to show you another option for how you might visualize something. When our budget is the same every month, we could just make it a line and then show our actual machine hours. So machine hours is how we're applying overhead. So again, trying to visualize, you know, 2 different ways. I think they're both acceptable, but I wanted to, again, explore different ways to present this information. All right, so again, I'm going to be using some of these total numbers to do the calculations, but this is how you might see exam data presented to you. But this is also, I want to encourage you, this is instead of pulling out a lot of Excel 12 months data and looking at it and showing it to someone in a memo or in a presentation, would these visualizations be more beneficial, especially when you're working with someone outside of accounting and finance? So my experience has been, if you are a CFO or a controller at a manufacturing company, and you're working with engineers, you're working with supply chain management that are, helping us make sure we have the supplies here, the raw materials here. You're working with human resources and trainers, your trainers for those new employees. When we take data, and we love data because we're accounting and finance folks, right? But when we take that data and we can present it in a way that's more useful to use other users, it just makes your seat at the table. I like that analogy. When you're sitting at the meeting and it's not oh no, the accountant's going to bring out another Excel spreadsheet. We don't want that. We want them to be excited because we're pointing out key relationships and data that we can discuss as a team. And I think that's really the true benefit of visualizations. All right, so now I wanted to walk you through the calculations. If this was the question you saw on your exam day, how would you work through the computations? So how do you find your predetermined overhead rate? I focus on that word pre meaning before, preceding. The predetermined overhead rate is found at the beginning of the year. At the beginning of the year, so we wouldn't have any of those actual data yet. The beginning of the year, we find our predetermined overhead rate. We take our budgeted overhead divided by our budgeted machine hours. And we have an overhead rate, and this is rounded to the nearest cent, of $1.19. So we will use this $1.19 per machine hour to apply or assign overhead to our production and our actual work. Now, why do companies use a predetermined overhead rate? That's a great CMA exam type question. So again, could the exam in a multiple choice or essay not only ask you to make this computation, but say, why do we need to know a predetermined overhead rate? Why do we find this overhead rate at the beginning of the year? And the reason that we do this is because we won't know our actual overhead for the year until the end of the year. So how do we prepare monthly financials? How do we analyze our profitability, our cost on a monthly basis? We use this predetermined overhead rate and we apply, I call them all my A words: apply, assign, allocate overhead to these products and these costs. That way I'm able to prepare monthly financial data. Then at the end of the year, we will see how well we did. That's a great question. So I see that coming in on the chat. Why can't we use the last year's? Okay. We will see this. I joked when I worked in accounting. I wanted to know who Sally was. And someone said, what do you mean, Sally? Can you guys see me writing on there? I was like, is there someone that works here named Sally? And that's same as last year. That's the abbreviation for same as last year. If this year is expected to be the same as last year, it would seem appropriate to use last year's rate for this year. But oftentimes, for example, we're in an inflationary period right now in the economy. So even if I think everything's going to be the same, my budgeted costs are probably going to be higher than last year. Do we have a change in our in our production in terms of how many machine hours we think we're going to use. So I do say that that is an appropriate use of using last year, but we generally don't see that in CMA type questions. We're looking at what's next year's expectations because they're different than last year's actual. But that's a great question.
Mutwakil also has a question. I'm enabling him to talk.
Okay.
Mutwakil, can you share your name directly?
I'm wondering, yeah, if they're having trouble, we're having trouble with audio questions perhaps? Or we can see them in the
This
chat.
seems
We
to
know
be
the
the
chat's
case
working.
because Mutwakil are you, if the audio is not working at your end, could you share your
Oh,
question in the chat as well?
oh no, they said they do not have
Okay,
questions. So.
understood.
Okay,
No
thank
problems.
you.
Yeah.
All right, so now let's
Yeah.
move on. And what would be the total applied overhead? Well, we use that $1.19 and we say, as we work through the months, what's our actual machine hours? So to apply overhead, you take the predetermined rate times the actual machine hours. And so our actual machine hours is 238,500 times our $1.19, and we would have 283,815. At the end of the year, is our overhead under or over applied? How good did we do? Comparing our actual overhead, because now it's the end of the year, and we know our actual overhead, compare it to our applied, and that's a difference of 13,621. Since the applied is more, so our applied overhead is higher or more than the actual overhead, this is an example of over applied overhead. So those are great examples of the types of overhead questions you could see in this area of CMA Part 1. What's the interpretation? So I'm not sure. So when we have over applied, what we'll do is we have to take this over or under applied and we have to close it at year end. And how we close that at year end is if it's over applied, that means we've costed too much. So we will actually correct our costing so that our final adjusted financial statements are correct. So any balance of over or under applied is closed at the end of the period. And that's also tested on the CMA exam. How do you close that? What's the implication of closing that? That is tested on the CMA exam as well. So I hope that answers that question. All right, so I'm going to move on and move into part 2. Part 2 is strategic financial management. Data visualizations are testable on part 1. So I just want to be very clear that, which visualization should I use, the types of analytics, those are part 1 topics. However, I wanted to show you that even though it's a part 2 topic, we could get data visualizations to help tell the story and understand the information. And so that's our focus as we move into part 2. One of the big areas of part 2 are the financial statement ratios. And so data visualizations are very useful. For example, here is a company, this is the Green Company, and they've just completed year 4, and they're assuming year 5 has the same results. And so we've been given a balance sheet. We have, excerpts from the financial statements. Data visualizations are a very effective way to do financial statement analysis. And so here we have a liquidity analysis where we have analyzed the current ratio and the quick ratio. These are types of ratios that you would need to be able to calculate on the CMA exam. So if you were given those balance sheets and income statements, could you calculate the current ratio, the quick ratio? And I think it's important because these are very clearly showing, the relationship, and we can see, we could have done this with lines or bars. Those would both be acceptable ways to visualize this liquidity analysis. But notice how my topic is the impact of transactions. Not only does an accountant and finance professional need to be able to calculate ratios, they need to be able to make decisions and analyze information about the future. And so I wanted to share with you, this is also the solvency. I wanted to show you that as a line chart. We could look at the debt to assets ratio, debt to equity ratio, financial leverage ratio. We could see those relationships as well. But what I wanted to share with you is these two ideas. A CMA candidate needs to understand the analysis, okay? And so this is what a CMA question could look like. They're looking to increase the investment in inventory by $75,000, and they're going to finance that with short-term debt. What's the impact to the ratios? So if I were given all of this data as a CMA exam candidate, I have to analyze this. Well, if we're increasing inventory, current assets will increase, but we're financing with short-term debt, so our current liabilities will also increase. So a CMA candidate needs to be able to use this information and make the calculation that the current ratio will decrease and the quick ratio will decrease. Okay, that's the type of exam question. Now, I want to switch that and say, what if you were presenting this at the board meeting or the planning meeting with your team? Instead of trying to work through these calculations, wouldn't your team appreciate year 5 with if this happens, or we call it pro forma? Wouldn't they appreciate what those bars would look like in the next year? Would that be a better way to explain an inventory policy change than starting to say these words that I have over here in the box? Absolutely. This is where I see visualization helping to tell the story. So you're the expert, you're the one that can make these calculations, but when you're talking to someone outside of accounting and finance, or a board member, or an inventory procurement specialist, I think that would really help. Just add another year to your column of this is what would happen if this happens next year. So that's what I wanted to talk about with financial impact of ratios. There's total liabilities would increase. There's no change to equity. So the debt to equity ratio would increase. Again, I think that would be better said by just seeing year 5 on my chart. All right, any questions about financial ratios before I move on to my last example? I haven't seen any in the chat. Do you have any?
Amy, I think we can move forward.
All right. Well, I have one last example, which is capital structure. Capital structure, one of the topics that's frequently tested is the weighted average cost of capital. And so I wanted to walk through a calculation with you, but also think about this as a decision that is frequently addressed in our profession, okay? We want to expand operations. How do we finance that expansion? So maybe not an everyday type of a decision, but definitely something that accounting and finance professionals are looked upon to be able to make that analysis. They need to raise $800,000. They have options. Should they issue bonds? Should they issue new shares of common stock? Or should they do some kind of combination? So this is very representative of a type of scenario that you could see on your exam day. We need to know the company's tax rate. Now, this is a question I'm frequently asked about the CMA exam. Someone will say, do I have to understand taxes? Income tax is not specifically tested on the CMA exam. So Internal Revenue Code and tax law is not on the CMA exam. The only time you have to understand taxes is, for example, here, how does that 40% tax rate influence your calculation? Okay, so how would we calculate a weighted average cost of capital? What I wanted to show you was that pie chart. Remember we had a pie chart earlier where we talked about how it's a percentage of a whole. This is another example of when a pie chart is very useful. So how are we currently structured? We currently have 43% retained earnings, 17% common stock, and 40% long-term debt. So this would be another example of a pie chart. And understanding this is our current capital structure and how should we finance the new issuance would change that pie chart. So again, I could have, this is my current pie chart. This is what would happen if we make that financing option. Now, I knew today that we wouldn't have time to work through all the financing options. So I just wanted to show you a cost of capital calculation. Here's the company's leverage analysis. Again, that would be a fun topic, but I knew we wouldn't have time to talk about it today. Another one of those dual axis charts that I thought you might enjoy to see. You know, we look at our debt and how our leverage has. Now notice on this one, we moved this way. You know, the most current year is at the front. Instead, you know, so paying attention to the directionality of your charts is very important. All right, but what I wanted to do is just kind of a review, because this is a CMA exam topic. How would you find the weighted average cost of capital? And a lot of times you'll see that WACC, weighted average cost of capital. You would need to know the cost of each of these components. So finding the cost of your debt financing, okay, and if you're studying for the exam, you'll want to review these concepts. The cost of debt is after tax, so that's how we arrive at this 6% cost. The cost of equity financing is actually 7.5%. So the cost of our equity financing is 7.5%. So different cost of different options that we have right now. And then we'd also have to look at the new structure. But just what is our current weighted average cost of capital? This is how I set up every time I do a weighted average cost of capital. It's a weighted average. So for those of you who are familiar with a weighted average computation, the cost of each of these and the weights of each of these. Okay, so with the magic of PowerPoint, the weights times the cost, then we find that our weighted average cost of capital, I knew it was going to be somewhere between 6 and 7.5%, right? It's going to be somewhere between 6 and 7.5%. But our current cost of capital on a weighted basis is 6.9%. So we would look at that when we were looking at the new financing options. How would these different options change our weighted average cost of capital? But I wanted to show you that with that visualization. This, I think, is very useful when you're discussing cost of capital and capital structure, because a pie chart makes perfect sense because these have to weight to be 100%. So that's been a very useful visualization for me when I'm explaining capital structure. Any questions on capital structure? So finance topics are included on part 2. So a lot of people think of this as more of a finance topic than an accounting topic, and that would be definitely something for part 2. All right, well, I'm going to turn the presentation over to you now, but I'll stay on if there's questions at the end that we can also answer.
No, fantastic. I think this was great. I, at least for one, have got a better understanding of why my seniors ask me for things in a certain fashion. Because I can understand, I can see it now that this is so much more helpful for the workplace. For the exam, for sure, this was definitely helpful. But in your practical career life, these visualizations will make life of everyone, including ourselves, much more easier. So it has been quite enlightening. Amy, thank you so much. We have a question from Muhammad. I think I'll leave this for you to take.
Oh, I see that now. The use of WACC for decision making. So that's our cost of of financing. So what we look at that is if we have a goal. So looking at the different options, because when we're looking at different options, issuing new debt has a specific cost. Is the cost of our new debt similar to our old debt? Anyone who's been following interest rates right now, the interest rates 3 years ago were much lower than they are today. And so should we be financing with debt or should we be financing with equity? What is that going to mean to our capital structure? So it's useful in understanding your structure, but those have cost. What's the cost of running our business? We also use weighted average cost of capital when we make investment decisions. So capital investments, or sometimes people call it capital budgeting. And those are topics that I didn't have time to cover today, like using net present value, internal rate of return. Those are also tested on the CMA exam. And so we would use our weighted average cost of capital when we're looking at those capital budgeting decisions as well. So, all right, well,
Perfect.
I'll stay on though if we have other questions.
Absolutely perfect. Thank you very much. And I understand where even the CMA is coming from in terms of getting more involvement with visualization in the exam pattern as well, because this is something which, from a learning perspective, is not just an exam, but from practical viewpoint, it has immense utility. So I really understand where CMA is coming from, and definitely seems like a very valuable viewpoint which they've kept from a very practical and career-oriented perspective. So definitely, for all the attendees online, in case you have questions, Amy is available. And using a financial calculator.
So yes, and you will be able to, on the CMA exam, you are able to use a calculator. There's approved calculators. But yes, it's just a simple average. I mean, it's a weighted average. I think we learned that here probably at about age 12 or 13, maybe in basic math. There's a lot of this that, as long as you can take the concept of a weighted average. So what I tell everyone is, here in the US, it would be like your grade point average is the example that I use. But you will be able to use a calculator. There's approved list of calculators that you can use on the CMA exam. One of the more popular ones that I see candidates using is called the BA2 Plus. So I don't know if some of you are already using that one. You're already using the tool. I used a basic calculator that added, subtracted, multiplied, and divide. And that's all I had the day I sat for the exam, and I was doing well. So what decision is used? So our weighted average cost of capital. So if we have different capital budgeting decisions, should we buy the new factory in this town or this town, and what's the cost of each of those? We would use the weighted average cost of capital as our discounting percentage. So we use the time value of money, and we find the present value of the future cash flows, we have to have a discount rate or a percentage to do the discounted cash flow analysis. That's what we use the WACC for. All right, I think that's all the questions for me right now that I can see.
Yes. Perfect. I think this has been wonderful. Thank you all so much for attending. Thank you, Amy, for a wonderful session. And I'm looking forward to the next time we can have you share some new insights about how to improve our careers. Because definitely this is going to be very practical for us at least. Thank you all. Thank you, everyone. For any information regarding today's presentation, the recording, do get in touch with this program advisor. And hope to see you all next time. Hope to see you soon. Thank you all. Have a good weekend.